Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehi Shah. With me as always is Ankita Saxena. This is the show where we'll be taking you through all the big buzzers in today's trading session. Also bring on technical experts on board to give you a tech check on some of those stocks as well. But before we get kick-started with all the big buzzers in today's trade, let's take a look at what the market is up to today. We started off pretty decently. We've taken a big knock ever since. We're struggling to hold on to the 24,600 mark on the Nifty. Quite the tumble coming in on that front. Nifty Bank too. Lesser losses coming in, but nonetheless in the red, Ankita.
Yes, absolutely. In fact, after yesterday's stellar rally, we are taking a bit of a breather. In fact, at this point, we are at the lowest point of the day in the market across board. If you see, because Nifty is not even managing to hold, it's just managing to hold on 24,600. We were above 24,700, but now we've given up all those gains. Nifty Bank also is trading with cuts of 0.7% at the lowest point of the day right now. Broader markets were doing very well. In fact, they were holding out in the green even when Nifty was taking it on the chin. Broader market for mid-cap also, it has given up all those gains. That is also moving towards the day's lowest point, trading up just 0.1% in the green. Small caps also were doing very well in the morning, has given up a slight bit of a gain, but nonetheless it is still managing to hold on with the gains of 0.5% on the small cap front. But let's look at the sectors then. The PSU banking pack is doing very well and it has been leading from the front since get-go. That's up 1.4%. Nifty Pharma is another counter that has been holding out quite decently since morning. That is also up 1.2% in trade. Nifty Media and is also doing very well with gains of 1%. But besides that, all the other sectors are in the red, especially Nifty IT and FMCG that are really taking it on the chin today. And Nifty IT is down almost 2% in trade, and Nifty FMCG also trading with cuts of 1.5%. Then with the top gainers for the Nifty, BEL, Geofinance, Dr. Reddy's, Cipla, they all doing very well, trading upwards of 1%. Infosys, Power Grid, TCS and HCL Tech, even Zomato, they are all trading with cuts of more than 2.5% right now, pulling down the Nifty as of now. Advance decline ratio is still tilted in the favor of advances, but right now we have moderated since morning. We are towards the lowest point of the day as of now. India VIX has also ticked up a little. It has inched up 1% in trade right now. So largely that's how the market is shaping up at this juncture, Snehi.
Absolutely, big cuts coming in. Zomato, Swiggy, both are down in today's trade. So the quick commerce space also under quite some pressure. Swiggy is down on the back of 85% lock-in period opening today. That stock was lower by almost 7%, but now has recovered. But let's move on and talk about all the stocks that are in focus in today's trade. And to get a better sense of these stocks on the technicals, let's now welcome on board Sachin Gupta, Senior Technical Analyst at 5paisa Capital. And from our in-house research team, we have Gaurav as well as Anj joining us on the show today. Good afternoon to all of you gentlemen. Let me kickstart the show then. Let's talk about IIFL Finance, a high flyer in today's trading session amid a market that is largely sideways because remember last week when IIFL Finance came out with its numbers, it was a good set of numbers, and today we have an HSBC note coming in on these numbers. They've upgraded the stock to a buy rating and also hiked the target price of the stock from 380 earlier to 550 now, which is quite a significant upside to where the stock is trading right now. They believe that there's a recovery in the microfinance segment. There's also higher system liquidity and lower cost of funds that they are seeing, and both of these factors could drive EPS going ahead. And there are potential risks that they are also seeing, but there's also higher competition in gold loans where they are also seeing some risk over there. So it's a mixed note coming in, but they are bullish on the stock going ahead because they've hiked their rating as well as their target price for the stock. They revised their FY26 and FY27 EPS estimates by +6 and +0.5%. So there's some more confidence coming in on IIFL Finance from HSBC, but very positive note coming in, stock up 4.5% as we speak.
All right, IIFL are doing very well in trade today. IIFL Finance up 4.5%. But coming to you, Sachin, you picked out ICICI Bank for us today. That is down 0% in trading session today. But ICICI Bank, all the big banking names, ICICI, HDFC, they were all were doing very well, trading towards their life highs. But tell us, with ICICI now from here on, where do you see the stock headed?
Hi, very good afternoon and thanks for having me today. Well, if we talk about the ICICI Bank, so after the continued upside momentums, we are witnessing some sideways or bearish momentums in these stocks. So we can say prices are holding up middle Bollinger Bands and as well as near to the important key moving averages, which is somehow indicating a further strength. But if we focus on the RSI, so it is somehow indicating some overbought territory. So that's why I'm expecting a quite downside momentum in the ICICI Bank from the current market price. However, the downside will be limited because overall trend is still looking bullish, and prices are already hovering near to the the all-time highs. So the downside would be limited, and if we see any dip in the particular stock, that will be the good opportunity for the buying further.
Alright, so that's ICICI Bank on the charts, but moving on to the next counter that is in focus today, and that is Tata Steel that has come out with its quarter 4 numbers. And if you take a look at the numbers, largely inline set coming in, revenue was slightly above, EBITDA and margins were in line with what we were penciling in at TT Now. Now, the Indian overseas volume also saw a rise, but the realizations also fell. That was also expected, and also the Netherlands, turned profitable, but the UK continues to report losses. The net debt has fallen to 4% on a quarter-on-quarter basis, led by the working capital release. And if you look at the revenue, we saw an uptick of 5% on a sequential basis. PAT also saw an increase of 1,062 crores in the quarter 4 as compared to 1,300 on a year-on-year basis. But let's look at the factors that contributed to an uptick of 5% on a sequential basis for revenues. It was led by higher volumes despite the fall in realizations in the UK and the Netherlands business. So the lower coking coal consumption cost in India and Netherlands also led to, was a factor to watch out for. Also, CLSA came out with a note. They're maintaining a hold call with a target price of 145 rupees per share. They feel that the consolidated adjusted EBITDA was in line, but the standalone volume growth of 3% on a year-on-year basis helped by capacity ramp up and see the strength a bit positive for the company. On the back of that, Tata Steel was in focus.
Okay, Tata Steel in focus on the back of its numbers, but we also managed to interact with the management of Tata Steel, and they have delivered a mixed show. But we caught up with the CEO and MD TV Narendran on what lies ahead in terms of volumes and strategy to reduce the debt in the quarters to come by. Let's go across and listen into a snippet of that chat.
The demand is quite resilient in India, and at least as far as Tata Steel is concerned, we've never really had to export much even in the past, and we don't need to do it today because we have very strong equity with our customers. We have a very strong distribution network. So I think we are very comfortable that any additional volume that we bring in, we will be able to sell in the domestic market. So this year we will have at least 1.5 million tons more to sell in India than we did last year because the Kalinganagar plant is ramping up. But we have a blast furnace relining in Jamshedpur, so that takes out some of the volumes. But net, we should have at least 1.5 million tons more to sell this year than last year in India. The net debt in end September, when we announced our results, was 88,000 crores. We've brought it down to 82,000 crores, 6,000 crores in the last 6 months. We expect it to go down further during this year as we get the additional volumes and if the margins stabilize at this levels or gets better. So I'm not giving you a specific number, but certainly we will see deleveraging happen more during this year.
Okay, that's the word coming in from the management of Tata Steel. We have numbers coming in from Cipla right now. According to agencies, net profit has come in at 1,220 crores. That stock is about 0.5% higher right now. We'll get you more details as and when we get them. But for now, Gaurav, you've picked out Hero MotoCorp for us, an earnings candidate. Take us through what the street is penciling in.
Yes, the numbers for Hero MotoCorp will come today, and when we talk about the expectation, now the street is expecting revenue to increase almost in the range of around just 1%. And when we talk about EBITDA, there also they are seeing just 1% increase on a year-on-year basis. In fact, what they're factoring in is that on a sequential basis, EBITDA may fall down almost by 7%. What they're saying is that the margins are likely to remain a little stable. In fact, the margins may also see some kind of contraction on a sequential basis. And as a result, when we talk about profitability, there we may see a sequential decline of around 9%. But on a YOY basis, because of other income, we may see an uptick of around 8%. Now, what they're saying is that the volume growth is likely to remain subdued in the two-wheeler segment. But at the same time, volume decline is likely to be somewhere in the range of 1% on a year-on-year basis and 6% on a sequential basis. What factors we should be looking out is that the average selling price, which is likely to improve almost by 3%, and at the same time, higher non-operating income, how it is going to play out in profitability is also key thing to watch out for. Any kind of product mix and any kind of changes in strategy in terms of EV is something to watch out for. But when we look at stock performance, it was actually up in the morning. It is up almost by 3% in the last 5 days. So definitely some bullish view is building up. So on the back of that, we are watching on Hero MotoCorp.
All right, so that is what we need to look out for as far as Hero MotoCorp is concerned. But Sachin, coming to you, picked up emphasis for us. Now, the entire IT pack has been reeling under pressure today. In fact, it is down almost 3%. It had started doing well in the last 1 month. It had ticked up almost 10%. But now, today, it has seen a fall of almost 3%. So from here, how do you see the stock reacting?
Well, after the significant decline from last 3 months, recently we witnessed a recovery move in the particular stock. And if we talk about it from last 1 or 2 weeks momentum, so it was continuously trading into the tight range between 1490 to 1520, and yesterday only it has surpassed that range and finally trading above the 1520 mark, which is the most important support level as of now. And today again we are witnessing some downside momentum in these stocks, but I think on the lower side it has already formed a base near around 1500 levels. So until it's sustained below the 1500, I think we should continue with the buying. On the higher side, I'm expecting a bit of upside momentums towards the level of 1630 and 1650. So that could be the targets for the coming days. In the near term, even in the near term, we can expect the targets. However, on the lower side, if anybody is holding the positions, they can intake the positions with the strict stop loss of 1500 below.
Okay, so that's the take on Infosys. Before we move on, let's just talk about Nifty 50 company Cipla coming out with its numbers. It's a largely inline set of numbers coming in from Cipla. Revenue has come in at 6,729 crores compared to 6,163 crores, which is up 9.2% on a year-on-year basis. Net profit also has come in at 1,222 crores compared to 939 crores, which is up 30% on a year-on-year basis. You have EBITDA that has seen a healthy uptick as well at 1,539 crores compared to 1,315 crores. EBITDA is below the expectation, and you also have margins that have come in at 22.8% compared to 21.4%. Although there is an increase in margin on a year-on-year basis, it is much below what ET now was expecting. So it's a miss coming in on the margin and EBITDA front, but in-line set of numbers coming in on the revenue and PAT front. The company has also declared dividend of 13 rupees per share and a special dividend of 3 rupees per share. But if you take a look at the chart of Cipla right now, there's been a sharp cut coming in on the stock right now after the numbers were reported, and it's a 0.5% cut coming in on Cipla right now on the back of mix set, if you could call it that, because revenue and PAT in line, but you have a miss coming in on EBITDA and EBITDA margins.
All right, so that's the report card for Cipla now. EBITDA and margins taking a knock there from what we were penciling in, and on the back of that, the stock is reacting with a sharp cut of 0.5% coming in right post the results. But we'll get you the fine print later on the show. But let's move on to Ansh, who's holding out another earnings candidate, that's Happiest Mind. Tell us, Ansh, what does the report card for Happiest Mind look like?
Well, they have reported dollar revenue of 62.9 million. If we see in CC terms, then they have reported growth of 1.1% sequentially. We're talking about in rupee terms, we are seeing an uptick of 2.6% revenue from 531 crore to 545 crore. Let's also see EBITDA. EBITDA has actually gone down by around 6% sequentially from 116 crore directly to 109.8 crore. Profit has also gone down by around 32% from 50 crore to 34 crore, and there was an exceptional item as well of 12 crore, but even if we adjust that, the total profit has actually gone down. But there are some positives as well, like active customer have gone up from 278 to 281, whereas the average revenue per active customer has improved from $898,000 to $917,000. But utilization remain in pressure. It has come down from 78% to 77.4%. Also, the voluntary attrition has gone up from 15.3% to 16.6%.
Okay, so that's the earnings fine print on Happiest Mind, and witnessing good traction in BFSI and healthcare. That's the word coming in from Joseph Anantaraju, the co-chairman and CEO at Happiest Mind Technologies. We interacted with him earlier in the day. Let's go across and listen into what the management had to say about the growth going ahead.
Yeah, so if you look at the BFSI performance, especially year on year, it has grown significantly, and there are and both organic and inorganic growth have contributed. As you know, both Pure Software and Aureus have a high concentration of BFSI revenues. Aureus more in insurance, and Pure Software more in the banking space. which was the reason why we made both of those acquisitions. So they've contributed quite a bit to the growth you see. Outside of that, we are seeing good traction in two verticals, in BFSI and the healthcare and life sciences. And as we speak, the pipeline from BFSI customers is quite positive and promising. And we expect this momentum to continue into FY26.
Okay, that's the word coming in from the management of Happiest Minds. But let's move on. We just spoke about Cipla a while back on the back of its earnings. But another pharma stock, Lupin, is in focus on the back of a completely different news flow. Positive news flow coming in for Lupin. That stock has seen a little bit of a tumble in today's trade, but nonetheless holding up with gains of 1%. So looking good for Lupin right now. Lupin has announced the launch of its generic version of the Tolvaptan tablets in the United States following approval from the US FDA. The company also holds exclusive first-to-file status, which now grants it 180 days of generic market exclusivity in the US. That's another positive coming in for the stock. Now remember, Tolvaptan is the generic equivalent of Jynarque and is indicated to slow the progression of kidney function decline in adults with rapidly progressing polycystic kidney disease. The reference product recorded estimated annual sales of roughly $1.47 billion in the US last year, and this launch is expected to meaningfully strengthen Lupin's US generics portfolio. Very positive news flow coming in for Lupin, not only the launch of its kidney tablet but also a 180-day exclusivity in the market for the same. Two positive news flows rather coming in for Lupin. On the back of that, stock is up 1%.
All right, that's Lupin up on the back of that news flow coming in. But coming to you, Sachin, you've also picked out Biocon for us, another pharma name. Now, the big news coming on pharma by the US President Donald Trump of, cutting the prices for prescription drugs in the US. Now, that can have a bearing on Biocon as well, one of the names that will have a bearing. But on the charts, what does Biocon look like to you?
Well, after the news flow, the Biocon is still trading into the tight range, and even overall, if we see the technical chart, so it is remaining in a sustained downtrend and trading near to its almost 350 range, 350 or even 300 on the lower side as a range, and there is no such sign of further recovery or further reversals. So I believe we can expect some downside momentum in the Biocon until it's sustained on the higher side. On the level of 350. So on the higher side, 350 acting as a major important resistance area for the Biocon. And if price sustained below this level, we can expect the lower side momentum towards the level of 310 and 300 levels. So I think if anybody is holding the positions in the Biocon, would suggest to exit the positions from the current market price or from on the pullback if price comes near around 340 and 345 levels. On the higher side, 350 acting as a resistance area.
Okay, those are the key levels to watch out for Biocon. Let's move on, and in fact, like Ankita was mentioning, the entire pharma pack has been in focus today because US President Donald Trump said that he will trim the prices of prescription drugs in the US immediately by 30 to 80%. We caught up with Kiran Mazumdar-Shaw, chairperson of the Biocon Group, and she discussed the rationale of this move and also spoke to us about how the order will impact Indian pharma companies. Let's go across and revisit that conversation we had with her earlier in the day.
You know, if you heard President Trump, it is very clear that he's targeting big pharma. And basically, he's talking about the big differential that exists between European and US prices. And he has basically called out a few examples. And what he is seeking is equalizing of drug pricing between developed countries and the US. He has clearly exempted developing countries from what he is seeking. Moreover, I think he's talking about focusing on affordability. I think Indian generics and biosimilars in general are shielded from what Trump plans to do.
Okay, so that's the word coming in from our interaction with Ms. Kiran Mazumdar-Shaw of the Biocon Group. But let's move on, and Gaurav, we'll come to you for Cochin Shipyard. That's a stock that you've picked out for us because even other than this, a lot of other defense stocks are in focus. But tell us why specifically is Cochin Shipyard in focus today?
Well, yes, Cochin Shipyard is in focus, and the reason being that Cochin Shipyard and DP World has now advanced its collaboration to develop a ship repair cluster in India. Now, the MOU was actually signed last month only that actually aims to bring global best practices to India's maritime sector and expand capacity in line with the country's national goal. When we talk about DP World, the executive said that we are laying foundation for a world-class ship repair and offshore fabrication ecosystem in India. This is actually a long-term commitment to foster innovation, generate skilled employment and contribute to India's vision to self-resilient and globally competitive maritime sector by 2030. When we talk about some other media reports also, they also suggest that India is also set to boost its shipbuilding infrastructure, because in Andhra Pradesh, the Cochin shipyard along with HD Hyundai is likely to build a large vessel, potentially investing around 10,000 crore rupees. So yet another positive news flow for the company, and as a result, when we talk about the stock performance, it is up in trade almost in the range of around 4%. So definitely watching out on this counter on the back of the positive news flow coming up in the morning.
All right, that's Cochin Shipyard up and away 4%. But the next counter that is in focus today is SRF. Now, despite posting good set of results for SRF, the stock is still reeling under pressure, perhaps profit booking coming on, because SRF was already trading around its 52-week high. So that is declining away in trade 4% despite good set of results coming in. Let's take a look at the numbers then. They posted a PAT uptake of 94% on a sequential basis at 526 crores versus 271 crores on a quarter-on-quarter basis. The revenue was up 23.5% on a sequential basis at 4,313 crores. The EBITDA also saw an uptick of 54.6% on a quarter-on-quarter basis at 957 crores, and the margins also saw an expansion of 445 basis points at 22.2% versus 17.7% on a sequential basis. A strong set coming in for SRF, but despite that, we see it declining away in trade with cuts of 4%, perhaps profit booking coming in on SRF.
Okay, yes, could be profit booking on SRF, and that's the reason the stock is falling in today's trade despite a good set of numbers. But let's move on and talk about L&T, a stock that's in focus not because of its earnings, but because of a major order win coming in. The company has announced that its buildings and factories vertical has secured large new orders from various state and central government undertakings in India. The value of the contract, according to L&T's internal classification, ranges anywhere between 2.5 and 5,000 crores. The contract has been awarded by the Central Public Works Department for the construction of Common Central Secretariat Buildings 6 and 7 in New Delhi. L&T's scope of work here comprises of the civil structure, finishes, associated mechanical, electrical and plumbing services, external development and 5 years of operation and maintenance. So quite a big order win coming in for L&T, anywhere between 2.5 to 5,000 crores is what the company is classifying this order win to be. So positive news flow coming in for the company. It had tipped over to the green when the news flow had come, but just a while ago we've seen a little bit of a tumble coming in on the stock, and right now the stock is trading with cuts of more than 0.5%.
All right, so that's L&T on the back of that news flow. But Sachin, you have also picked out L&T on the charts. Tell us what you see on the charts for this counter.
Well, after breaking off its recent consolidations around the level of 3,380 levels, the stock has seen a sharp upside momentum and supported by the rising volumes as well as the strong up move in the RSI. And both the indicators as well as the another key indicators like 200 moving averages and 100 TMS is also supporting the further upward momentum. So I'm expecting the bit of upside momentum in the particular stock on the higher side. 650 and 3,700 could be the target, while on the lower side the support is intact, which is near around 3,480 levels. So if anybody is holding the positions, can intact the positions with the strict stop loss of 3,480 for the upside target of 3,700.
All right, that's L&T on the charts. But coming to you, Ansh, Bharti Airtel is what you picked out for us, an earnings candidate that's set to report its Q4 numbers. Tell us what can we expect from this telecom major.
Well, revenue is expected to go up by around 7.7% sequentially from 45,129 crore directly to 48,602 crore. Whereas if we talk about EBITDA, then that is expected to increase by more than 11% to 27,505 crore. Whereas if we talk about margin, then that is expected to go up by more than 200 basis points from 54.5% to 56.6%. Talking about net profit, that is actually expected to go down by around 4% to 6,752 crore, and this is mainly because of an exceptional gain which was reported in last quarter. If we talk about ARPU, then that is expected to go up from 245 to 250 rupees, whereas data subscriber is expected to go up by around 2.2%. But apart from this number, we should look out for progress on 5G implementation, capex and future tariff hikes.
Okay, Ansh, thanks for taking us through what to expect expect from Bharti Airtel's numbers. But on that note, let's slip into a very short break on this edition of Market Fatafat. And on the other side, we'll keep it going with more puzzles in today's trade.